on the percentage. The word is on percentage of what you call of the value of goods. It is based on percentage of the value of goods. So this is basically based on percentage of the value of goods. Is the point at home? I hope the point is at home. So then I talk about specific duty. That's a very common question in the lab. The difference between ad valorem and specific duty. So then I proceed to what's called specific duty. So specific duty. So whenever we talk about specific duty, we are saying that this is based on quantity or per unit of export input. Based on what's called quantity, or what's called per unit, call it per unit. We have it as per unit of what we call export, or exports to what we call input. So that is what's called specific duty. Together. Abdi Nasir, is that at home? Abdi Nasir Aji, is that at home? I want next Saturday we'll be done with everything so that we just focus. Perfect. So determination of custom duty. How do I determine? Determination, we call it determination of what we call of the custom duty. How do we basically determine what's called the custom duty? That is what's called determination. And for those who are just joining, on Monday and Tuesday, we are working on public finance, determination of what's called the custom duty. So how do we determine custom duty? Remember, custom duty is determined based on what's called CFR, CFI. If you look at questions on VAT, we talked more on the CFI. It's basically determined based on CFI. Are we together? So this C, we say that C stands for what we call cost. Cost, we call it cost. Initial cost of purchase from country of origin. Initial cost of what we call of purchase, we say from what we call from the country of origin. Initial cost of purchase from country of origin, from origin. Are we together? Initial cost of purchase. Then I stands for what we call insurance. We call it insurance. Look at the word insurance. I is insurance. Cost up to the point of entry. Insurance cost up to what? Up to the point of entry. Up to the point of entry. Together. Insurance up to the point of entry. We say insurance up to the point of entry. Exclude insurance after goods have entered. Exclude insurance, excludes insurance after goods have entered. After goods have, we say have entered what we call the country. After the goods have entered the country. Then freight, F stands for what we call freight. So freight up to the point of entry, we say transportation cost from the country of origin, transportation cost, we say up to what we call the point of entry, the point of what we call of entry. So transportation cost up to what we call the point of entry. Again, this exclude freight after goods have entered the country. Excludes freight. We call it after the goods have entered into what we call into the country. After the goods have entered into the country. I hope that is understood. So custom duty is basically based on CFR. On our calculations for VAT, you notice that altogether. Have you noticed that? Have you noticed that? You notice that. Then there's an entry that I put in those notes, just basically implying that VAT has what call VAT on import is charged on CFI. VAT, we know this, and we always cover that VAT is charged on CFI up to the point of entry. It is always exclusive of VAT. So we normally charge VAT after charging the import duty on those commodity, then we charge the VAT. But that VAT should always be exclusive, or it should always be exclusive, meaning 16 over 100, meaning 16 over 100. Together, tip, meaning 16 over 100, meaning 16 over 100. Together, team. Remember, VAT has a cascading effect on import. We charge it after import, charging import duty. We charge it after charging what we call the import duty. So reasons for imposition of custom duty. Why do we charge import duty? Reasons for what we call for imposition, what we call imposition of what we call of the custom duty. Why do we charge custom duty? Why do we charge custom duty? Why do we charge custom duty? So one of the first reasons, because it's tax, raise tax revenue for the government. We say raise what we call tax revenue. We say tax revenue for what we call for the government, to raise what's called the tax revenue for the government. The first reason to raise tax revenue for the government. Restriction of import of goods into the country. Restriction, we call it restriction of what we call of import of goods, call it into what we call into the country. So restrict importation of goods into the country. How do you restrict? By raising what's called the import duty. How do we restrict? We call it by raising. The word is raising what's called the import duty. You make it very expensive to import goods into the country. Are we together? Then protect local industry from competition from outside the country. Protect. The next is protect local industry, and say from competition, and we call it from what we call from outside the country, to basically protect what we call the local industry from what we call from competition outside the country. And lastly is to prevent what we call dumping. We call it prevent dumping. Lastly, to prevent dumping. I want to explain what dumping is. Karibu Meshak. I want to explain what dumping is. So whenever we talk about dumping, this is where cheap and substandard product or goods of poor quality are sold within a country at a lower price after being imported from outside the country. That is what's called dumping. Dumping is where cheap and substandard products, that basically means products of low quality, get their way into the country and are sold at cheaper price after being imported outside the country. So raising custom duty is one of the ways to prevent what we call dumping. If we are together, we respond with yes. So when Malimo goes to ways of preventing dumping, we proceed to what's called ways of what we call of preventing. We call it preventing what we call dumping. Ways of preventing what we call the dumping. Remember, tax is 50-50, most likely 50-50. Calculation 50, theory 50. So be very careful. Calculation 50, theory 50. So how do we prevent dumping? How do we not allow cheap and substandard product get their way? So number one is raising custom duty. One is to raise custom duty, and what's called and other taxes. Raise the custom duty and other taxes. It becomes very difficult. It becomes very expensive to import out here. Then you have impose complicated. We call it impose what we call complicated. We call it complicated procedures. Impose what we call complicated procedures. Make it very hard to get those goods together. Ban importation of substandard product. You can ban importation of what they call of substandard products. Ban importation of what they call the substandard product. You ban what we call importation of a substandard product. And say, impose every penalty on those who contravene. Impose what we call every penalty on those who contravene, contravene what we call legal procedures. So impose what we call every penalty on those who basically contravene what we call the legal procedures. Make it every penalty for them. So as a way of preventing what we call the dumping altogether. Strengthen cabs to monitor goods entering the country. So you can talk about strengthen cabs to monitor, call it monitor, goods entering the country, goods entering what's called the country. So strengthen the cabs to monitor goods that are entering the country. Strengthen cabs to monitor goods that are entering the country. Then you can talk about surveillance camera. Put surveillance camera to monitor, surveillance camera, and the essence is to monitor goods entering the country at border boards. So that's how we prevent what's called dumping. Tafadhali bonyeza yes kama tuko pamoja. Please, PFT theory will give you 50%. That's why we have to cover everything. Yeah. So then we go to documents used in relation to what we call custom duty. Documents used in relation to custom duty. Documents, we call it documents. We call it used in relation. The word is in relation to what? To the custom duty. In relation to what they call the custom duty. So we have documents used and you say it in relation to the custom duty. So this is a common question. Even in the last exam, we had this question. Documents that are used in relation to the custom duty. Documents that are used in relation to the custom duty. So number one is what's called custom entry form. One, we call it the custom. Call it the entry form. Custom entry form. Custom entry form. So when we talk about custom entry form, is used to fill details relating to goods imported into the country. Fill details. Fill what's called details. Details relating to goods. We'll say being imported. The word is imported into what we call into the country. Goods being imported into the country. To fill details on goods that are basically being imported in the country. So while we have the name of the goods, we'll have one of the detailed names of what we call the goods. Names of the goods. We'll have what's called names of the goods. Clearing and forwarding agent. We have what we call clearing and what we call the forwarding agent. Clearing and what's called the forwarding agent. Clearing and the forwarding agent. We'll have details on country of origin. Country of what we call of origin. We have the country of origin. We have the country of origin. Country of destination. What we call the country of what we call of destination. Where they're going to, country of destination. We have the country of destination. Then we also have what we call description. Description of what we call of goods. That is description of the goods. Naomba unipatie yes kama tuko pamoja. Naomba unipatie yes. That is the first document. Custom entry form. So that is the first one. Then the next we call it the bill of